Good afternoon, traders and investors. Will back here with another one, and happy new year to each and every one of you out there. Hope you guys had a very beautiful holiday season. Now, starting off in the new year, first day ends up being red as we saw some very hefty profit taking in big tech. So we will be going over exactly what happened today. Bit of a red day in the markets, especially in our QQQ here, down at one point on the day, over 2%. So we'll be looking at our major indexes, see how everything is handling up in the technical analysis side. We'll be going over our major tech names as well. We're going to add a major tech name to the list for the new year, which is going to be Netflix. So we will be doing Netflix on a daily basis here in terms of the technical rundown. We also had some Tesla deliveries numbers. So we're going to take a look at those as well in the Tesla section at the end of the video when we do the breakdown of Tesla on the chart. So without further ado, guys, let's get into today's video and see exactly what happened today. So SPY down 0.56%, QQQ down 1.69%. Very bad day on QQQ, but we did have some very healthy rotation by financials, and namely healthcare, guys. If you guys have been on the channel for a while, you've known that healthcare has been our laggard sector for a better part of 2023. And I was saying that if we do get a little bit of a sell-off in QQQ, I was praying, but hoping that XLV would be there to recover the losses. And that's exactly what has happened today. So take a look at the heat map here, guys. We were forecasting on the channel a bit of profit taking early January. That was the main negative catalyst for early on in the year, as investors, both retail and institutions, had a lot of capital gains lined up, doing a little bit of window dressing end of the year for those bonuses, right? They want to show big gains, and then early year, they can rotate and pivot and take some profits, especially out of big tech, which is known to be a more defensive play for a lot of retail and institutions. So 2023 recap, big tech outperformed a lot because it was more of a safe haven. They have a lot of pricing power, and during an uncertain time, guys, this was a very easy trade for most people to stick into, which is why big tech was pretty much some of the outperformers of last year. But in my opinion, guys, big tech this year will not have the sizable gains that they did have last year. And there's a few reasons for that, but let's look into the heat map and I'll show you guys exactly what we mean here. So you can see on the day, very, very decent sell-off here in our major tech names. And that's everything from your major tech to the semiconductors, anything under communication services as well. Financials holding up their own. Healthcare, massive outperformance here. And you had a little bit of a sell-off as well in your industrials and consumer cyclical sectors as well, but defensives holding up very well. Now, keep an eye on this chart for the one-day relative performance. And now let's go take a look at your past 1 year. And you'll see what exactly is selling off. Keep an eye here and keep an eye on your healthcare. What do you notice when I flip the chart to the 1 year performance? Everything that sold off massively today were the things that were up the most as of last year. So you can see all of the massive gains here by big tech, right? Google, Meta, Amazon, Microsoft, Apple putting in absolutely ridiculous gains for the last year, NVIDIA. And now healthcare relatively muted over the past year. Now let me flip it back to this 1 day, and you can see where the profit taking has started to occur. So big tech, obviously still very, very decent trade here for the new year, but I do not think in this year that you will see these types of percentage gains here, guys. 220% on NVIDIA, 56% on Google, almost 200% on Meta, 78% on Amazon. Why? Because a lot of these stocks, guys, were coming off very, very crushed levels coming out of 2022. So it's normal that if their business models were to stay the same and they didn't get hit on EPS that hard last year, which was the case, didn't get hit on revenue too hard, didn't get hit on EPS, that they were going to have a little bit of mean reversion and come all the way back. And that's what you saw all over last year. NVIDIA, Amazon, Apple, Google, Microsoft, Meta, all coming back from their utmost lows to relatively close back to their all-time highs. Now, that's why I don't think that big tech is going to have such a tremendous year of outperformance this year. They could end up beating the index because they are still positioned very well, but seeing 50, 60, 100, 200% on big tech this year, I do not think that that's going to be the case. Yes, they will have very decent years, in my opinion. 2024 is going to be a very bullish year, in my opinion, but I do believe this is the year of the market broadening out as investors, both retail and institutions, pivot the large sums of money that they made in big tech and rotate that into the rest of the market that has been kept low. A little bit of a headline here, guys, as well, right? You'll see that I like this chart right here. 72% of stocks in the S&P 500 have underperformed the index this year. This is obviously talking about the end of 2023. So you can see as a whole, on average, guys, the average here is about 50%. If I were to draw a line right down the middle here, you'll see that some years are better, some years are worse, but for the most part, 50% of stocks usually do perform underperform or overperform, since it's pretty much halfway the index as a whole. Now we have a little bit of lopsided data here, and this data runs all the way back to 1980 pretty much, and you can see we're at one of the highest levels of underperformance in relation to the index. So I do believe that since it was a very top heavy index last year with most of the gains coming from big tech and semiconductors, I do believe that this year will be the year where the market broadens out more in a more streamlined fashion. So you're going to have more gains in healthcare, more gains in financials as well, and a lot more gains in your value names that did not have the tremendous rally that big tech had last year. That being said, I do think it's going to be a very good year overall. So on the run day relative performance here, guys, you'll see healthcare with a big outperformer here, utilities, consumer defensive, real estate, and energy on the plus side, but negative here, technology as a whole, almost 3% to the downside here, guys. And that was largely contributed. You got a nice little downgrade here on Apple stock. That was pretty much due to come with all of their Apple Watch events, right? So because of the Apple Watch ban on being able to ship new Apple Watches to customers, obviously that's going to take a little bit of a hit on Apple's revenue for the quarter. So expecting to see something happen from that. But we did have one analyst downgrade on Apple today, but that was pretty much not the reason why the entire market fell apart. I do still believe that it is largely due to profit taking and just a technical sell-off here after overbought levels. We were calling this, guys, for the past couple of weeks. 9 weeks of green was a 2-decade record at this point. So a little bit of a sell-off is warranted. So let's get into the nitty gritty of the technicals and see how we're lining up here today, guys, right? So SPY currently battling with the 12 EMA right now. The line in the sand level, I'll remind you, is 468. Break of 468, you would lose your series of higher highs and higher lows, and you potentially set up the bears for a potential daily downtrend. If you get a daily downtrend, no biggie at all. This is what we were not hoping for, but this is what we were calling for on the channel, right? Little bit of a weekly pullback, weekly consolidation would be very healthy. Anything above 454, just looking for the weekly higher low for further continuation. If this does last this first week of January and the second week of January, I would not be surprised, but I do expect the end of January to be fairly bullish. We do have a CPI read in about 2 weeks, and then we have Jerome Powell on January 31st, 30th or 31st, if I'm not mistaken, coming out as well. And obviously your tech earnings start in 3 weeks too. And I do believe that those will be bullish catalysts for the market to potentially take us higher. Everything looking decent on SPY. However, your short-term bears are now in control. I was telling you guys, keep an eye, 12 EMA on the 4-hour chart. Well, you can see the bears are now in control. They had it a few Wednesdays ago. Now they are making an attempt at it again. So if that 4-hour downtrend does continue here and we start getting into some oversold territory, it's very possible that the bears are able to roll this over into a daily downtrend into healthy weekly consolidation. Now moving on to QQQ. QQQ down 1.69%, but you guys can see it went all the way down to about the 400 level here, which would have been about 2.1% at the worst part of the day. QQQ losing the daily uptrend in a significant fashion here, right? So they broke the 403.24 level that we were watching for, the higher low. So now it is up to see, are the bulls going to be able to V-shape this, or the most likely scenario is the bears are going to be able to set up a daily downtrend into a bit of weekly consolidation here. Weekly levels are still healthy, guys. Anything pretty much above 383. The bulls are just looking for a higher low to set the weekly higher low for the weekly uptrend. Just a quick reminder here, guys, we closed the month of December very beautifully. We are in a monthly uptrend on all these indexes. So all of this is just very, very healthy pullback after a 9-week run. On the 4-hour chart, it's just the same. I was telling you guys, watch out for the significant loss of the 12 EMA, something that you haven't had pretty much since this rally started back in November, and now they've lost it in a significant fashion. So we are looking for the perpetual continuation of the 4-hour downtrend here until your daily levels get bottomed out, which will also signify your weekly higher low as well. So just keep an eye on that, guys. We're going to keep an eye on this daily RSI as well. Keep an eye on your 4-hour RSI, almost oversold already. So we'll see how long it takes the bulls to reverse that. If the daily downtrend does come, eventually we're going to be looking for the size of the bounce for the bulls to get an engulfing move. My sweet spot on QQQ, 395 all the way down to pretty much your 383 level for the big area of support. Moving on to financials. Financials doing a great job of rotating to the upside while you had your big tech sell-off, right? So Financials doing a very good job here. Daily uptrend is still maintained at this point, right? So we are still looking any move lower at this point, just looking for a higher low, anything above 36.90, still looking for a higher low. Bulls just grinding higher at this point. 12 EMA should be the first line in the sand for all you guys. And the 12 EMA, sorry about that, on the 4-hour chart is still our main guide here on the short time frames. Financials looking very, very, very healthy indeed. And if we do pull back, guys, just keep in mind, 37 down to 36 is your big area of support, right? So even if we do pull back on this weekly and financials join the bears here to the downside, 37 down to 36 should provide a very good area of clean support to be basing a new level for the bulls. Now, XLV Healthcare, outperformance indeed, and you absolutely love to see it after staying muted for the better part of 2023. XLV Healthcare finally coming alive at the time that the bulls need it most in the broad market. That's what pretty much held your SPY back from going down over 1.5% is the fact that you had very beautiful rotation between your main sectors here. So healthcare looking very, very, very bullish here. Daily uptrend is obviously clear as day here. Any move down when this move is done topping out right here, any move lower is going to be for a higher low, anything above 132.68, looking for the daily higher low for the potential daily uptrend continuation here. Healthcare now looking very good. Why? Because we finally broken above our weekly level of resistance. This was very big resistance here in the past here as well. This whole zone, just a very choppy area. Very pleased to see the bulls crack through that area in a significant fashion. In my opinion, at this point, if we do get a little bit of daily sell-off here, into a daily downtrend, a bit of bearish downturn here in the month of January. Well, I do believe now this 136 all the way down to 132 is a beautiful area of support that the bulls will be able to rally off of. If ever we get a little bit of a weekly higher low put in, I do believe this area will be the one to be watching for that weekly higher low for further price increases into 2024. Your moving averages are right at the lower end of that as well. Healthcare looking very, very good. Now moving on to the Russell here, guys. Russell battling for its life here at the 12 EMA as well. So any move lower off of this higher low right here, 196.50, is just looking for a daily higher low for further price continuation. But the bears are attacking this with momentum. So if ever we do lose a level and set up the daily downtrend, guys, no problem at all. Just looking for a very healthy weekly higher low. Obviously, this area is going to be the first area to target this red box here, which was your previous resistance. That's going to be your current support. So that's all the way down to pretty much the 195 level. So keep an eye on that. But if ever we do trend a little bit lower, I could see 191, 192 area coming up. That would be a very juicy area as well. Your moving averages are down there. And even if we pull back all the way down to there, guys, the bulls are still set up so beautifully on the weekly chart to just make this a 2 weekly leg up move here into further price increases into 2024. So looking very good, even if the Russell did have a little bit of a sell-off here today. I do believe the Russell will be one of the best benefactors of a 2024 market rally with some mean reversion coming in. Keep in mind, the Russell, guys, is still significantly off your all-time high, and the rotation into growth stocks has not come into full effect yet. The rates are still high. We still don't have any rate cuts on the table formally, right? Only speculation as of so far. But I do believe that once that gets more concrete, the Russell is going to absolutely fly into the later end of this year. So consider starting a few positions if you are a Russell investor in the next dip cycle coming up here. Dow Jones showing no signs of slowing down whatsoever, still looking very, very healthy, beautiful daily uptrend here. And that's pretty much because the Dow Jones stayed muted throughout 2023 as well, except for the last couple of months of trading here, November and December. For the most part, it was very muted throughout the year. So not a lot of Dow Jones names do have significant gains in the aspect of big tech in the same percentages. So Dow Jones still a bit lagging in terms of the percentage performance. Yes, it's at all-time highs, but in terms of the gains that were had last year, they weren't as significant as a lot of your big tech names. So I am still expecting the value trades to be very, very good this year as well. In terms of your technical levels here, daily higher low is set. Any move lower at this point, just going to be for a daily higher low, anything above 37,050. Just looking for your daily higher low. If for whatever which reason the bulls lose this and lose the 12 EMA, lose the 4-hour 12 EMA as well, right? Well, guys, we're just going to be looking for a potential daily downtrend into weekly consolidation, the same thing that SPY and QQQ have started right now. And the area to be watching for support here is your previous all-time high. That's going to be between these two yellow lines, 36,800 all the way down to 36,400-ish is going to be a decent level of support for the bulls. But as of now, the bulls are in absolute full control of this daily trend still. Now, let's move down to big tech right away. So big tech looking fairly good here, guys, right? Apple, right? Looking fairly good in terms of a sell-off, looking for the dips is what I mean to buy, right? And what I mean to say here. So quickly approaching my sweet spot on Apple, 183 down to pretty much 175. I said if it got back into this area, I would be playing Apple, and that has not changed. Apple, very decent sell-off, right? Daily downtrend just continues to be confirmed at this point. We were worried about that after Friday's day, after the Apple bulls pretty much rolled over here. Loss of the 12 EMA on the daily, loss of the 12 EMA earlier on the 4-hour, and you can see how hard these bears have grinded this down today. We are already in 4-hour oversold conditions here on the RSI down low. So Apple looking fairly decent for coming into my sweet spot currently, right? So Apple bulls are at a loss of the daily uptrend right now. They've also lost the weekly uptrend as well. That is not that big of a deal here, guys. The weekly level to watch was 187.51, and we flushed it today. So unfortunately, the weekly uptrend is lost, but it is not a weekly downtrend yet. Weekly downtrend would be lower high and then lower low, right? So bulls still have a chance at this. Where you see the chart really coming together here, guys, is on the monthly. This is just going to be simply a monthly tightening range by Apple. Apple has done this in the past where they tighten up for a little bit for a couple of months and then explode to the upside, right? So no stranger to sideways consolidation is Apple. That's what we're going to be looking out for. Apple's still looking very healthy. And on the monthly, guys, you can see the 12 EMA on the monthly, guys, is right down here at about 178. So I am looking for the monthly to tighten up. No real significant red flags on Apple as a whole. Just the short-term timeframes are lost. So at this point, any move higher, guys, measure the size of the bounce, right? Anything below 194.70, going to be looking for the lower high for potential lower low continuation by your bears. Bears are now in full control of the daily time frame here and the weekly as well here. Going to be looking, can the bulls, how high is this rally going to be? And are they going to be able to reset the weekly uptrend? Or will we just get caught in some sideways consolidation? Or at worst, they set the weekly downtrend, which would just mean more monthly consolidation here. All that to be said, guys, coming up on my sweet spot pretty soon. The closer we can get to sub 180, the happier I am to be picking up a few shares of Apple. So very decent sell-off as of today. But the most likely scenario, guys, is going to be looking lower high for potential trend continuation of the downside. Then it'll be up as soon as this move tops out, or as soon as this move bottoms out here. Going to be looking for the size of the bounce. If the bulls can get high enough on the bounce, have a chance to reset the daily uptrend. But if they just kind of flutter out like this and then start trending to the lows, well, your daily downtrend will very well continue in terms of the probability. So that's pretty much everything for Apple. AMD coming down a lot as well. AMD, one of the best trades here into end of 2023, now starting to unravel ever so slightly after such good gains here for the past 9 weeks. Normal for AMD to take a little bit of a breather here. So we were looking out for the daily higher low. Now the bears have taken back a lot of this move here, guys. Anything above 135.19 was just looking out for a daily higher low for further price continuation. But now with the bears having taken back so much of this move, there could be a potential to set up a daily downtrend. Daily downtrend confirmed on AMD would just mean weekly consolidation is currently underway at this point, right? So anything above 116, guys, just looking for a weekly higher low. This is a beautiful weekly uptrend. Nothing to be worried about on AMD so far. If we do pull down ever so slightly more, guys, 132 down to about 125 is where I'm personally going shopping for AMD. Previous 52-week highs back in 2023 is going to be the area of support that I'm looking out for. So AMD looking very good. I'm excited for this pullback on AMD, right? If we get this daily downtrend, extended daily downtrend, just looking to snipe these weekly higher lows for further price continuation in 2024. Monthly uptrend is beautiful here, guys. Really nothing to be worried about with this early January profit taking for AMD. Now, Amazon, moving on to Amazon. Amazon even selling off a little bit as well, 1.32% to the downside here. So losing your bull flag, now favoring the bear. So Amazon setting the daily downtrend in motion, which means your weekly consolidation is underway. And that does make sense here, guys, after Amazon pretty much breaching your highs. Due for a little bit of consolidation here before a future leg up. I like this area of consolidation, guys. 148 all the way down to 143 is very, very solid. It's the previous area of resistance for Amazon in this level right here. Amazon with a beautiful weekly uptrend. So weekly consolidation, looking for the bulls to play some very good defense here. You can see very big previous chop zone. So we'll see If the bears are able to get through there, I would be highly surprised if the bears are able to smash this in one clean shot. But if they do here, guys, I will be looking to be adding even more positions. The lower we come all the way towards 140 is the more attracted I am to Amazon. Amazon's still looking good though on a technical basis. Weekly is looking very good, and the monthly as well is in full breakout mode. So a little bit of a consolidation is just that. It's healthy consolidation for Amazon in my opinion. At this point, guys, where the bulls still have a little decent chance here of pretty much V-shaping this back to pretty much new 52-week highs at this point. But as of now, the bears are in short-term control of most of big tech. So we'll see how far Amazon gets dragged down with the rest of them. Now moving on to Google. So Google as well with a bit of a brutal sell-off here in the morning here, guys. You can see, but they did a great job of recovering. But from the open all the way to the lows, guys, almost 2.25% before recovering intraday here. So Google reacting nicely from our previous support zone. This was the level between our two yellow lines right here. You can see that best on the weekly here was very, very big resistance for a long time here on Google. And now the market's reacting from that space again. So Google was just looking for a daily higher low, clear daily uptrend on Google, still anything above 131.18, just looking for a daily higher low for further price continuation to the upside here. So we'll see if the bulls are able to play defense in this area here, guys. It is looking very good for a little bit of a bounce trade. We will see, can the bulls just continue this daily uptrend, or will they set a daily downtrend with some of the rest of big tech here? If for whatever reason they set the daily downtrend here, guys, keep an eye, just looking for a higher low, anything above 129.61, just looking for a higher low on the weekly at this point. Lower level going to be looking out for mid 130s. If we can find Google back in the mid 130s, in my opinion, that is a very decent level for me to be buying a bit more shares of Google as well. So Google looking healthier than the most, battling in our support zone, but the bears starting to challenge. Now moving on to Meta. Now Meta, decent little sell-off on Meta here today, right? Meta even top to bottom was down a lot more than 2.17%. They, as a matter of fact, were down all the way to about 3.85%, almost 4% on Meta, but recovering nicely intraday. Where did we react off of, guys? Well, we reacted off of the classic previous resistance area, which is now support. So we'll see how long the bulls are able to defend that. We were always looking for a daily higher low on Meta, right? So this entire spot is predicated on the higher low 329.23. So daily uptrend confirmed, looking for a higher low. Anything above 329 is going to be that higher low here. So bulls still with a little bit of space to work with, still battling our previous resistance, which is now support, still trying to use the moving average as support as well. But your 4-hour bears have now taken control of the short-term moving averages, right? So we are on the lookout for that. They've now done it. So Meta, even if Meta comes down a little bit further here and sets a potential daily downtrend, that's fine. We're just looking for weekly consolidation as well. Weekly consolidation was to be expected. Anything above 314.17, just looking for a weekly higher low for further price continuation into 2024. No red flags on any of big tech here, guys. Just a little bit of early profit taking early January. So keep an eye on these daily downtrends. If the bulls are able to rebound from them, if they do set the daily downtrends, guys, you know that we're in for at least another week or so of weekly consolidation. And for some dip buying, Meta, 325 down to about 295 is my sweet spot for adding shares. Now Microsoft coming down brutally as well on the morning, but recovering intraday a little bit. So you can see they kind of tried to test the lower end of this range right here. We're still range bound on Microsoft. 377 all the way down to pretty much 364 is going to be the range to watch here, guys. We had a little bit of bullish lean leading into the end of the year, but if we continue to get some profit taking on major tech, it would not surprise me that Microsoft comes down as well. So if the bears are able to set a potential daily downtrend, that would be the flush of this range zone, 364.50. Get a flush of that. Daily downtrend is now set by the bears, and then we will have a weekly downtrend as well. Weekly downtrend might sound scary, guys, but it's not that big of a deal. Why? That would just be monthly consolidation for Microsoft. And Microsoft does this all the time here, guys. 4 or 5 months up, 2 months, a little bit sideways, and then continues to rally, right? So Microsoft always does this, and it is a very healthy company, so no long-term red flags on the company whatsoever. Just blasted through to the all-time highs pretty much mid-November, and has kind of been chilling there ever since here, right? So kind of growing into its valuation. None of these companies have earnings for the next 3-4 weeks. So we'll see how that plays out. But Microsoft still challenging this zone. Obviously, the easy trade is if the bulls are just able to recapture the daily uptrend, then they also set the weekly higher low, continue this weekly uptrend as well. But we're looking for the bearish case scenarios here, guys. Bearish case scenario, we lose this range, daily downtrend is set, your weekly downtrend is set, and we end up with more monthly consolidation. Monthly buying zone for me, guys, for Microsoft, this second yellow box right here, 355 down to 340 is my super sweet spot for Microsoft. Previous all-time high resistance, previous all-time high resistance. That is your beautiful area of support. Now moving on to Netflix. Netflix coming down, guys, almost 4% here today. So we haven't done any technical analysis on this stock on the channel. So this is the first day for Netflix pretty much, but we're going to be covering it every single day for the foreseeable future because I do think this company still has a substantial amount of gains in front of it. So Netflix, what we're really dealing with here, well, daily uptrend was very healthy, but now we're challenging the previous higher lows. 464 was going to be the level. We flushed it a little bit here today. So the bears potentially setting up here for the daily downtrend attempt, right? Looking for the lower high and potential lower low setup. If that happens, Netflix is okay. We're still in a weekly uptrend right here, right? So anything above 446.26, just looking for the weekly higher low for further trend continuation here into 2024. This area right here, guys, is going to be a very, very, very crucial area for Netflix to defend. Talking about this 448, right? 448 all the way down to pretty much 422 is going to be a very beautiful zone of support here. Very, very big previous chop zone in the market. So I do think if the bulls pull down into somewhere for some more support, I do believe that they will be pulling down into this area. On the monthly, Netflix looking absolutely beautiful. So even if we do get here, guys, daily downtrend, weekly pullback, challenging our weekly previous lows right here, right? The monthly is really the kicker for me, right? It's a beautiful monthly uptrend right now, and the bulls do have tons of space, anything above 350, guys. Just looking for a monthly higher low as well. So keep an eye on this sweet spot that I've just labeled on the chart here. 450 all the way down to pretty much your 425 level is going to be that buy zone for me. Now moving on to NVIDIA. NVIDIA also losing a bit of ground here. So the bears setting up the daily downtrend, unfortunately, at this point. So daily downtrend means weekly consolidation, guys. And this was pretty much the worst case scenario that could happen to NVIDIA, ending up in a tightening range at the highs with some potential profit taking early January. So now the true area to watch here, guys, is going to be your 450 level. That is the absolute crucial level to maintain by the bulls here. So daily downtrend is underway. And as soon as this daily move bottoms out here, going to be looking for a lower high and potential lower low continuation the entire time that we're in a daily consolidation here. On the weekly here, guys, right? Weekly need to protect 450. If you lose 450, it is potentially a weekly downtrend underway. And then unfortunately, we're just due for more monthly consolidation, potentially until NVIDIA grows even more into its valuation, even though it's cheap on a forward basis for this current year, and no earnings to save us until pretty much mid-February here. So keep an eye on the level here, guys. 450 is going to be a crucial area for the bulls to defend. Now, bulls are still in control of this weekly. They can still just tighten up here and then move to the upside. So that's why I say need to protect this 450 level. If not, guys, we're just going to continue to tighten up this monthly range into early 2024. So moving down now to Tesla. So guys, Tesla, a little bit of a sell-off here today, but before getting into the Tesla chart, guys, we need to look at the deliveries here today. So a big factor was, right, for Tesla earnings, Tesla's first to report here pretty much with Netflix on the same day as they always do in about 3 weeks' time. So Tesla, it was all about the deliveries and the guidance. If deliveries were going to be bad and the guidance was going to be somewhat medium, right, Tesla was not going to have a very good start of the year. So everything was relying on those deliveries numbers. We needed to see how was production, how was deliveries, and actually they did do well. So thankfully for Tesla, Tesla reports record 485K deliveries for Q4, hits 1.8 million annual target delivery goal. So they hit their annual delivery goal, but they will be potentially a bit short on revenue because of all the price cuts that they've done this year. So now what we need to look at earnings for is going to be that EPS and margins, guys. This entire earnings is going to be played on EPS and margins, but at least now, in my opinion, we are saved from a potential negative 10 to 15% day on earnings. If these deliveries would have come in slightly lower or significantly lower than estimates, guys, your earnings would have potentially been an absolute disaster. Even with good guidance, the market would have had fun really bringing this stock down in a significant fashion. But now that they've hit their delivery goal, they've actually hit the production goal as well. We may be due for some good guidance from Elon Musk as well. So the one main technical factor that remains for earnings is going to be EPS and gross margins. That's the two things that Wall Street is going to be very focused on right here. So decent little report for deliveries, guys, right? So Tesla set a new delivery record for the fourth quarter and met its 2023 delivery target, shaking off a third quarter miss and assuaging investors concerned with any hiccups as competition ramps up across the globe. So here you have your chart here, guys. Tesla beats Q4 estimates in the Q4 delivery estimates, setting a new record, right? So deliveries continue to outperform every single year. Tesla is still a growing company here. And here's the kicker here, guys. All told for 2023, Tesla said vehicle deliveries grew 38% year over year to 1.81 million, while production grew 35% year over year to 1.85 million. So a little bit of a discrepancy here. That's them selling off a little bit of built up inventory. That's always a good sign. While its 38% delivery growth rate was below its 50% compound annual growth rate, Tesla previously said it would not attain the goal due to factory shutdowns and improvements that occurred in Q3. So we had some guidance on this in Q2 when they said they would be shutting down from some factories for some production updates and whatnot. You also had the Model 3 revamp entirely, which did take a little bit of time to switch over the manufacturing equipment for. So that's normal, but at least it was factors that are in their control. It's not due necessarily to a slowdown in demand. It's a slowdown due to factory shutdowns and improvement. So very, very good here, guys. This was an important quarter for Tesla to show strong deliveries with clear momentum into 2024 as demand has upticked since quarter three based on all our global checks. That was coming in from Dan Ives here. So very, very good deliveries report from Tesla here. I'm very pleased they were able to hit their number here. Now, as I said, it all comes down to the earnings, EPS, gross margins, and guidance from Elon Musk. Need him to have a positive, upbeat tone, especially in an environment where interest rates will potentially be coming down. Curious to see if he says that that was going to stimulate demand, as he was so bearish on interest rates last earnings call. So Tesla currently battling, guys, trying to protect this higher low at all costs, 247.09. We're not able to close below that today, but the bears did cut it, right? So now, after such a significant move to the downside here, engulfing all of this bullish move to the downside, there's only two possible scenarios, in my opinion, guys, until earnings. Number one, if the market continues to roll over and people take profit into big tech, could end up setting the lower high and lower low scenario, which would send us into a little bit of a daily downtrend for the bears here. In terms of the weekly, guys, weekly bulls still have a bit of space to be working with, right? Weekly uptrend is confirmed. At this point, looking for a pullback. Anything above 228.50 is just going to be looking for a weekly higher low for further price increases into 2024. I do believe Tesla should have a good year. Curious to see their guidance here. So it wouldn't surprise me, guys, if we stay kind of trapped, if we do come down back into this range, 245 all the way down to 230. I do believe that is the range where we will probably be stuck in until pretty much our earnings, especially if the rest of the market does continue to sell off here, right? Tesla may just be due for a little bit of consolidation back into our consolidation range, 245 down to 230. The closer we get to 230, guys, the more options I do want to write. 230 all the way down to pretty much 200 is my sweet spot on Tesla. So if you do get to revisit that area, I will be potentially adding a bit more shares down here in the form of short put options. So let's just see how everything goes for earnings. Obviously, the bulls can recapture this, right? They're protecting this. They're trying to make a double bottom here. So they really need to get their behinds in gear here over the next couple of days. If they want to save this daily uptrend, need to put in a hefty bounce here and reset the daily uptrend to the upside. That's pretty much everything for Tesla. Now moving on to Palantir. Palantir, unfortunately, guys, flushing your 1714 lows. That was the area to protect. Bulls not able to save it here. So Palantir, unfortunately, daily downtrend simply continues at this point, right? So any move higher at this point, going to be looking for a lower high. Anything below 1790, looking for a lower high for daily downtrend continuation here. Until this chart bottoms out, we're going to need to look for 4-hour oversold conditions. We have those. 1-hour oversold conditions, barely have those. The daily still has a way to go here, and we may be even potentially going down to the previous earnings gap fill. That would be pretty much a break here of the $15 mark, which pretty much almost coincides with your 200-day moving average right down here at about 1520. So bulls not able to play defense, not able to save my 18 to 17 sweet spot that I was looking for them to protect here. And now, unfortunately, the bears taking back a bit too much of the move here. right? You can clearly see at this point, the bears, unfortunately, setting the weekly downtrend at this point. That just means that Palantir is in for a bit more monthly consolidation here. So the higher levels on the monthly right now at this point, guys, our next area of support is going to be all the way down in the 15 level, right? We really have to target this low right here. So 15 all the way down to pretty much 1480-ish is going to be the next area of target support after losing this down here. So we're going to be targeting this whole chop zone right here at the bottom end of your range, right? So this is pretty much anything from about $15.50 all the way down to your lows right here around $14 is going to be the next area of big support for Palantir. Very juicy buying opportunity if we do trend down in that direction continuously. Palantir on a long-term basis, guys, still very bullish on the company. It's just now, guys, we've lost the technicals on the daily. We've lost the technicals as well on the weekly. So now, unfortunately, we just have to continue to consolidate sideways until the company provides us with more bullish guidance here and potentially some S&P 500 inclusion news could be some bullish catalysts for the stock. Now, lastly, PayPal. PayPal, on a day where everything was significantly red, guys, it's nice to see PayPal able to protect. Now, obviously, not a lot of investors would have been profit taking on PayPal. Why? Because, well, PayPal ended year to date last year red pretty much. So not a lot to sell off on PayPal. It's already so crushed. And you saw that in a lot of stocks here today in the market, guys. A lot of your stocks that were crushed over 2023 did not sell off that much today here, guys. Really only the stocks that ran very, very hard or either all of 2023 or late November, December were the ones taking profit here today. PayPal with a bit of a muted day here today, still looking to protect this area, guys. Your $60 all the way down to about $58 range is going to be the area to watch for PayPal. Yes, we lost a bit of the tightening range right here in favor towards the downside here, a little bit of a downside bias here. You can see that right here, loss of the support area. Bulls trying to save it as best as they can here, but bears potentially able to set up the 4-hour downtrend play if the markets do continue to sell off. I will be looking down here, guys, for more support. This is 60 all the way down to $58 range. Really don't want to lose that, guys. That would mean a break pretty much of your weekly higher low pattern pretty much every single week, right? For the last 8-9 weeks at this point, we've been able to set weekly higher lows. A little bit of a weekly pullback could be warranted at this point, right? After rallying a substantial amount from the lows of pretty much $50 right here. So we'll see how PayPal manages that. I'm very happy with the size of the move after this most recent down leg here on the weekly. Very happy with the size of the move on PayPal. Would like to see them really protect this 60 all the way down to 58 area. That would be perfect for a little breakout and retest of this current support zone here before moving higher into the rest of 2024. So PayPal looking fairly decent here, guys. Not gonna lie, I do like this chart a lot, even though we did break this little short-term area right here. So just keep an eye, guys. 60 all the way down to 58 is going to be the next key area for PayPal to protect. Really need to defend that for their lives to keep this weekly momentum alive, keep these moving averages on the weekly protected as well. That's pretty much everything I had for you guys in terms of our stock portfolio rundowns. So now we're going to take a look at my own trading portfolio and see if I've changed any positions for the new year and how we're tackling that. So guys, taking a look into my portfolio positions here, you will see that not a lot has changed here, guys, today. Even though we had a red day today, I am waiting a little bit to be writing more options positions. I don't think that this will be a one-day sell-off. I do believe the profit taking in big tech especially will potentially continue. So I'm saving my buying power, waiting for stocks to come to me, guys. I would really like to get a bit more Amazon, to get a bit more AMD as well. So we're waiting for the deals to come to us. We're going to take this easy this week and just continue to cover a bit of our positions that we already had. So you can see CSIQ didn't want to sacrifice a lot of the games. We wrote covered calls last week for about 85 cents at the 26s. Those are currently in profit here. CSIQ pulling off its most recent highs, ending below 26 today. So we will see if they end under 26, we will pocket all of this premium here, and we will look to write even more covered calls and bring our average down even further. Our average is currently right at about 27.18. So we're almost break even on the position, but not yet. Google 141 calls. Google now is significantly below 141, right? They're trading at about 139.56. So we'll see if they close below 141. If they do close below 141 this week, I will be pocketing all of this premium. You can see a lot of the premium already came out of the call, and my Google position, even though I didn't update it on the chart just yet, my average cost right now, guys, is all the way down to pretty much 130. 130.1 is pretty much my average cost. So very, very happy about this average cost on Google. I will continue to roll these covered calls. They've been playing off very beautifully in the past couple of weeks, writing around the 140, 141 strike. Trade Desk, we got assigned Trade Desk last week here. You can see the shares are right down here. 100 shares of Trade Desk at $72 with a little bit of a premium credit here. So you can see Trade Desk now, we wrote the 72 calls here for about 71 cents. So Trade Desk, we will see if they recapture the $72 area. I'm not too nervous for Trade Desk, even though they set the daily downtrend here. We're just pretty much looking for a weekly uptrend reversal, right? So even if they do come down into the mid 60 areas, I may even throw an extra contract at it. Trade Desk still looking very attractive, still relatively significantly off the all-time highs here, about 38%, and really beautiful consolidation, really accumulating a lot at this price range as the company continues to increase revenue at an exponential rate here, and really doing a great job here of increasing their EPS as well over the past year. So Trade Desk, a company I'm very healthy, I'm very comfortable being in this company at this price. So my Trade Desk average pretty much at this point, right, 71.56. We got another 71 cents after this one today. So our average should be pretty much around 70.8, right? So still still above the, slightly below our average right now is the price currently. But I do believe Trade Desk is going to be able to recapture that $72 level fairly easily and wheel us out of the position. And everything else is relatively the same, guys. Still have my swing shares, Adobe, Amazon, TMF, nothing changed there. Oracle, no change at all. Bitcoin and Ethereum still haven't added to those small, tiny positions. BABA, currently out of range of covered calls. CP, holding on to this one. I was looking to maybe take profit on this one in the new year, since we are in the new year. So we'll see. I'm happy with this position, guys. I'm comfortable with it. May just take profit on it and roll that money into another options play over the course of this week. Haven't decided on that yet, but so far so good. Really like this position as a whole, and I have a really good average cost on it too, so can't really be too mad about that. Google, we're still holding those 100 shares. Nike, not covered calls yet. Starbucks, either not in the range of covered calls. Trade Desk, we just explained. Palantir's dropped a lot, so currently not able to write covered calls around my $18 cost. Palantir average cost now is going to be very, very, very low here, guys, right? So you guys saw how much Palantir I was writing over the past couple of weeks. On the 800 shares specifically, though, our average cost is pretty much down to about $17.34. So not that high of an average cost, not that low either, but with the amount of if I were to include the premium of all the contracts that I wrote at 17.5 over the past 3 weeks, our true average cost on playing Palantir over the past month is probably down in the low 16s, right? So very, very good. I'm really not nervous about this position on Palantir at all. PayPal, still not high enough for covered calls. CSIQ, we explained higher. And my Canadian banking shares, you see, are still just chilling there, up about $1 a share on 1,000 shares. So all in all, guys, not many trades here today. Still looking for a bit more juicier dips. I want to make the most of this dip here, guys. And I am expecting potentially this week and the next week to be some pullback weeks. So I'm just waiting for the market to come to me, especially on big tech. We're going to be looking for things to come to us, being patient, and then loading up with a lot of buying power here and getting 2024 started off to a bang by buying the dip properly and patiently, the way that we always do on the channel here, guys. So I hope you guys appreciated today's video. Oh, I did make some small profit takes here in my long-term shares account. That's with another broker here with my main bank. So I don't know if you guys remember this, but this was all the way back on the channel back here in July. So you can see back here in July 31st, I did buy one call on public storage, right? So it was a March call for this March, $240 call here for $3.15. So that's March 15th, right? At a $240 strike. We bought those for $51. Well, we just closed them here today, guys. We closed that contract at a 40% profit, closed it for $74 almost. So very happy about that, roughly, let's call it about $2,300 in gains here over the past pretty much 6 months that I've been holding this contract. It was a tiny position, but a position that I liked nonetheless. It also came with 10 shares. So I did sell the 10 shares that I bought here as well as a whole here. So those kind of add to a little bit of a profit as well. So fairly happy with that trade. It was just a little bit of a mean reversion trade. I like the company at that value. And we did also take a little bit of profits on Costco, still holding a decent amount of Costco shares in my long-term account, but just wanted to show you guys that I am taking a little bit of profits on Costco. After having getting paid the dividend, I figured it was time to take a tiny little bit of position off the table and potentially go shopping for some more deals. Costco obviously has ran a ton since their earnings, so just looking for a little bit of a weekly mean reversion back here to maybe our moving averages, lower 600s and whatnot. Needs a little bit of consolidation. Costco has run a lot, so just a little couple profit-taking trades that I was waiting for the New Year's, similar to the rest of the market probably, for taking profits. So that's pretty much everything I had for you guys today here. I hope you enjoyed the video. If you did, consider dropping a like, really appreciate it. And also consider subscribing to the channel if you're new. Almost 550 subscribers here, guys. We're getting up there quickly now. Really appreciate every single one of you for that. And as always, guys, if you have any questions at all, you want me to look at some stocks, options, macro, whatever you guys like, leave it down below in the comments and I'll get back to you ASAP. So take care, guys. I'll see you tomorrow after the close. Let's continue being vigilant and being patient to buy these dips that we've been predicting now for the past couple of weeks. They are now here. Let's just be patient for them, okay? Take care. See you tomorrow. Peace.